The world is slowly moving away from the US dollar, and gold is stepping back into the spotlight as the go-to reserve asset. That shift, often called de-dollarization, is one of the big reasons gold prices keep hitting record highs. Now, this isn't some sudden crash. It's a process unfolding step by step. Think of it like this. If you had a vault to store your wealth, would you rather fill it with solid gold or with paper promises, IOUs, that can be printed endlessly? Central banks around the world are answering that question by choosing gold. For decades, they stocked up on US Treasuries, treating them as wealth. But over time, they realized those IOUs could be created in the trillions at the push of a button. That means dilution, inflation, even the risk of worthlessness. So now, instead of piling up paper, they're stacking gold. And the numbers tell the story. For the first time since 1996, foreign central banks hold more gold than US Treasuries. Look at the long-term chart, and you'll see gold's rise has plenty of room left to run. In many ways, the last 50 years of fiat currency have been a giant experiment. And right now, that experiment looks like it's starting to unravel. For decades, we've been told that gold is outdated, that it's fine to run the world on paper money backed by nothing. But let's be real. Fiat currency isn't the norm in human history. It's the experiment. And that experiment is starting to fail. Gold is making a comeback as sound money. Just look around the world. China is not only producing gold, but importing massive amounts. Russia has been stockpiling gold, especially after its dollar assets were frozen. That move showed the world that the US dollar can be weaponized. If Washington doesn't like what you're doing, your money can be frozen or even taken. India is buying more gold too, partly because of heavy tariffs and the risk of being pressured under US terms. And it's not just rivals of the US, even allies are quietly shifting to gold. El Salvador, known for its Bitcoin experiment, is now buying gold as well. There's even speculation that much of the gold once stored in US vaults is gone, sold or leased out, which could explain why America itself has been importing gold at record levels. Some believe this is preparation for a major gold revaluation in the coming years. Here's the bottom line. This global move from dollars to gold isn't slowing down. For it to reverse, the US would need to restore trust, balance its budget, stop printing trillions, and even return frozen assets. But let's be honest, that's not happening. Which means de-dollarization will continue, and gold's rise is far from over. Gold is sitting around $3,600 an ounce right now, and in my view, it's only a matter of time before we see it climb to $3,700, $4,000, even $10,000. Will it get there in a straight line? Of course not, but the direction is clear. Why? Because the money supply keeps expanding. The more dollars that get printed, the more of those weaker dollars it takes to buy the same ounce of gold. That's just how the system works. And with the Federal Reserve preparing to cut interest rates, not just once, but likely multiple times over the next year or two, plus the possibility of more quantitative easing in 2026, gold has some strong tailwinds behind it. Now, some people worry gold is already overbought. But here's the thing. Most of the demand right now is coming from central banks and governments, not everyday investors. In the US, gold makes up only about 0.5% of portfolios, compared to the historical average of 2%. Retail investors haven't really jumped in yet. You'll know when they do. When coin shops have lines out the door, premiums skyrocket, and gold becomes a hot topic in casual conversations. We're not there yet. So if you're thinking about starting a position in gold, you're not late. Sure, it would have been better to buy months or years ago, but it's still early in this cycle. And with de-dollarization continuing, a process, not a one-time event, the long-term trend is clear. The bigger picture is this. Inflation will get worse, wealth inequality will widen, and financial pressure on ordinary people will intensify. Gold isn't just about profit, it's about protection. It's one of the few ways to shield yourself from the fallout of a system that's losing trust. Before you go, remember this. Knowledge only matters if you use it, so take what you've learned today, apply it, and watch how it changes the way you see the world. If you want to keep growing with us, hit subscribe, and I'll see you in the next one.